quotes. I need to add this because we're gonna run out soon. I had a month where I was just posting these quotes every day. The month of May. Um, in the month of May. Yep. So it goes, a goal without a trading plan is just a wish. Any goal that you may have, uh, trading related, that is not written down, it is just a wish. I've come across so many traders and investors that I'm coaching, even on the professional side, fund managers who would say, I have a plan, it's in my head, but then it's easy to deviate from something that you do not have in in writing. It's not tangible. You cannot go back to it and see if you're really following the plan. So I think if you have it in your head, is as good as not having one. So always have a plan. A plan is gonna be, a roadmap. Any of the big businesses that we see every day, today, they all started with a plan. They have a plan. The reason they are successful is that they're following a plan. So trading is not different. Not to sound like an expert at anything, but I really do not understand people who trade without a plan or know it by head. Um, yeah. So what does a trading plan entail? It entails your, before we get to strategies and everything, your goals and objectives with trading, um, which goes beyond making money. I think that the first few goals you need to have do not have to be money related, in a sense. The first goal that you need to have, it is mastering a repeatable and scalable system. Repeatable and scalable system. The reason Apple was able to open so many stores around the world is because they figured out how their plan works in the state, and then once they had a solid proof of concept, they were able to scale it to other, parts of the world. So your trading plan basically will put some order in chaos. It will give you clarity, and it should be simple. Like I said, your main objectives, what kind of markets, are you comfortable trading, your, what we call your your risk management plan or your risk appetite. How much are you willing to risk per trade? Your maximum drawdown. How many trades are you willing to trade in a day, week, a month? Personally, I only take about 3 trades a week, which will amount to 12 in a month. And out of those 3 in a week, I'm only expecting to make money from one. And if I make money from that one, it's going to take care of my losses and put me in profit. I always, whenever I create a system, I always take care of the downside, because if you can take care of the downside, it is easy to make money. So let's look at trading economics, basically high impact news that may affect the markets, right? German consumer morale unexpectedly falls, so more bad news for Europe. US futures down as investors await Nvidia earnings and data. I think Nvidia earnings are going to be quite high. Nvidia is this company that is leading with AI technology, and it has been the best stock of 2024. So I think those earnings are going to be high. But speaking of the US, we're also expecting some, um, data on unemployment. We're also expecting the US Federal Reserve to cut interest rates probably by 50 or 25 basis points. Now, this sounds like gibberish to so many of you. I wouldn't say it's because it's not important. It is important, but just remember that what happens on the fundamental side of things, um, doesn't um, really move the market. But what it does is it news events normally invoke two human emotions, which is fear and greed, which we see on the charts. If an investor is fearful, they're going to sell their stocks or asset classes. If they're greedy, they're going to buy more of that. So yeah, what's not appearing here, what I think we need to take note of is, once again, the war between now Iran, Israel, and Palestine is intensifying. So there might be a halt of oil production in the Middle East. And as we know, um, excuse me, as we know, the demand for oil and petroleum products is always high. We need oil for transport. We need oil um, for heating and all of these things, and industrial production as well. So the demand is going to be high, and by halting production, that means supply is going to drop, and we will expect higher prices. I've already alerted friends of mine who are in the oil and petroleum industry to stock as much fuel as possible, um, so that whenever fuel prices are increasing, they are on the good side of things. They make money from that. Funny thing about these friends of mine, they don't come back to me and say thank you with some money, but it's okay. So let's look at the forex factory calendar. We are expecting US consumer confidence later today at 4 p.m. Actually, in the next probably 45 minutes. And tomorrow morning, high impact news are coming from inflation news, which is CPI from Australia at 3:30 a.m. You see, if you focus on news, there's gonna be hours you won't sleep. Well, I'm always awake at this time because I have an Australian group that I'm working with as well, and some developers for the broker. So yeah, that is what we have coming. But I think I've spent about 10 minutes talking about the fundamentals, but really it hasn't given you an idea of what to trade, how is the market going to behave, because sometimes they contradict each other. Like we saw earlier, the expectation of Nvidia earnings might push the dollar to the upside, but when the US cuts interest rates, that might take the dollar down. So much happening. So hence I always say the one thing that the investor, the banker, the hedge fund manager, the president of the world, if there is, have in common is the price chart. So if you can be able to read the price chart, you will understand market direction. So with that said, congratulations to those who have been attending the Real Forex Trader Bootcamp. I think we're halfway through. We're going to finish by the end of this week. By the end of this week, you will have a pretty clear idea of how to read the direction of the financial markets. So yeah, as usual, we'll always start with the dollar index. If we look at the dollar index from a monthly time frame, let me remove this. So we had some lessons. It is really edging lower. My expectation is for it to come to the $100 mark. However, we can go further to $90 as time goes on. What does the weakness of the dollar mean? The weakness of the dollar means gold might push up at a certain stage, and gold, we do expect gold to push up at a later stage, not now, at a later stage. Why? Because during times of economic and political instability, investors normally withdraw their money from certain economies, for instance from the US, because there's lots of uncertainties surrounding the US. They take that money and then they put it in a safe haven asset, which is gold. Why? Because a safe haven asset always appreciates. If you look at the graph of gold over the years, it's just been going up. Recently, we had all-time highs of $2,500 per ounce on gold prices. So The monthly was bearish. The weekly is a bit bullish. Probably the daily is, oh, it's a bit bearish. However, I'm expecting the dollar index to come down here to the 100 mark. That's when I will be expecting to trade pairs that are related, so to speak. Um, just a second. Right. Let's look at gold, where we're currently sitting at around 2000, 2510 dollars per ounce, on a monthly. Hence I'm saying we should be looking for buying opportunities. However, Lamuli and I earlier on, he was on a trade, so we're trying to look at um how valid that trade is on a short term. Yes, it's valid. So I had taken a sell. So let's look at the weekly. We're bullish on a monthly. The weekly is bearish, as you can see. Why bearish? Because opening price of the weekly candlestick was up here and we're trading lower than that. So let's look at the daily. So don't worry, Mlamuli, your trade is still valid. The daily is bearish, but on the long term, what are we anticipating from gold? It is for it to come down here and push further to the upside, like that. So can you take some sell positions? Not yet, unless you're like Mlamuli, who got in earlier on this trade. So let me show you guys why. Did I confirm the validity of his trade? So we look at market pushing up like that, loss of momentum, then gained momentum here. So what ended up happening is that we broke this low. So for those that are in the Real Forex Trader Bootcamp, they would understand this. This is what we call change of character, right? The market changing from an uptrend to a downtrend. So what we had anticipated with Mlamuli was the market to come back to this area of 2520, and exactly the market did that. Let me go to a smaller time frame. So he has an entry somewhere around here. So probably in about 66 pips profit, we are expecting it to go further down. So what I would suggest from Lamoli is, since stop losses were somewhere in this region, make sure that you move them inside the profit region now, maybe somewhere here. Why? Because remember, the overall trend is bullish, so you don't want to be taken out. So you'd rather walk away with a little bit of profit while still aiming for the whole big move to the downside. One would ask, why wouldn't he just close the trade, or why is he moving stop loss? So that when the trade comes back against you, you don't lose anything. Of course, that's the first reason. Reason number two, that would be, always give the market enough room to breathe, right? And also to eliminate worry from his end, whether you're at work, whether you're running your own business. Once you've moved your stop loss, sorry, I'm just adding this, the previous supply that we responded to. So once you add your own stop loss, what normally happens is, we call it a risk-free trade. Now you can go to sleep. Now you can do whatever. Now you can concentrate in meetings, because this trade basically has less chances of going against you. So what I have for you is one setup, actually two. I have one for you in CAD JPY and another one on CHF JPY. The one on CHF JPY, I've already taken on the 50,000 funded account that I'm documenting for your benefit. So CHF JPY, let us start on a monthly time frame. So this is what I'm trading with CHF JPY is what we call a reversal. So the monthly is bearish. So I'm selling the CHF JPY. Why? Because the highest time frame is bearish. And by the time I analyzed it, which was last week. We were also bearish on a weekly. Okay. And the daily, the current week and daily, they are looking bullish. So this is current market price. We're coming from these highs, and I'm anticipating this to fall a bit lower than that. I am selling this. It looks confusing now, but I'll keep repeating this. I'm selling this because the monthly time frame or the highest time frame is bearish. And also last week when I analyzed the opportunity, um, we had more bearish sentiment. So this was the last drop, significant drop. This was the sharpest significant drop. And this is just consolidation, right? Normally we do not trade here, but if you'd want to find another opportunity here, so if we can refine that, this still looks good. So remember, if you want to find confirmation, the market was going up here. Remember, the main trend is going down monthly. So we're looking for opportunities to sell now. So higher high, higher low, higher high, higher low, higher high. We were anticipating a higher low and a higher high, which didn't happen. But what ended up happening was a change of character or an end of the uptrend. An end of an uptrend tells us that the market is changing now. And look at the drop, very aggressive, which signifies a presence of an institutional seller at this area. So we will wait with a sell over here. So everyone was selling here. Don't mind them. Don't panic, right? This is a sign. You can't predict this. Wait for the market to sell off. You're going to wait on the other side. So you're going to wait for buyers to come in. That's who you're going to sell to. Never sell when everyone is selling. Because the question is, who are you selling to? Never buy when everyone is buying. Question is, who are you buying from? So a buyer needs to meet a seller. You can have a 1:6 here. And let's look at the CHF JPY. CHF JPY. So we're bullish on a monthly. Let me remove all the drawings. Bullish on a weekly. Bullish on a daily. So here you'd anticipate buying opportunities, but what I have is a reversal. What I've been teaching you guys to trade all along was what we call pullbacks. So here's an aggressive push down here. So let's further look at that on lower time frames. So I would say drop, base, rally. So somewhere here, would expect it to come here. So would expect this to fall to those areas and then maybe push further up. One would say, look at this drop. It is a significant drop. But currently, everything is giving us opportunities to buy this. So any currency pair that you'd like us to analyze, ladies and gentlemen, please just type it in the comment box. So yeah, we can consider this high. Yep, we can.
I'm not sure if you guys did GBP USD. I'm not sure if you guys did it.
Not yet. Let's look at GBP USD cable. The Great British Pound against the United States dollar. Honestly, I'm trying to stay away from the dollar. Kutala says oil, please. Yep, I'm gonna show you guys oil. So on a monthly time frame, we're bullish. GBP USD. Bullish on a weekly. This is a current weekly candlestick, even though it's that small because we're early on in the week. bullish on a daily as well. So from a daily time frame, if we would go lower with price, because we're bullish, we're looking to buy from lower prices. Okay, if we would go lower in price from current market price, this shows us a significant buyer here. So that's who we would like to buy with. So there's a significant buyer there. So with GBP USD, what I would say we need to wait for is for price to come back to. I'll read your comments. I'll read your comments just now. Yep. This is where the significant push to the upside happened. So let's see if we can see it come back to 1.31, 200, and then push further up, almost like gold. Okay. Why almost like gold? Because just like gold, the US dollar is the code currency. Okay, so when the US dollar is going down, GBP USD and gold will go up because they have what we call a negative correlation. So you can use correlations to time the markets. Okay, you can use correlations to time the markets or even verify if your analysis is correct. So with this here, just to give you perspective or a plan of this trade, if you'd enter there at 131 200, stop losses below this region, and if you are aiming for this high, you have yourself a nice 1:7 risk reward ratio, meaning if you're risking 1%, there's a potential 7.8% return here. Potential, not that the market has to do that. Language is very important. Now Uncle Chris wants us to look at the dollar South African rand. Okay, cool. Just makes
Yeah, just a quick one, ne? We must always trade at 4 hours, ne? Or what?
out it depends on the individual, in the sense that some people are day traders. They get into a trade and want to exit the same day. So I'd say for those people, look at 1 hour, between 1 hour and 15 minutes. But if you are a swing trader like me, um that's where you then look at between 2 hours and the daily. I also take position trades where I would hold the trade for 8 months plus. The longest I've held was 1 year, 2 months. That was on oil. With those, I just trade the monthly and the daily time frame. So it depends on the individual. I cannot say stick to this because I'll then throw you off your trading plan or your edge. We are good in different ways. For some people, I'm more patient. For some people, they can't handle the stress of seeing the markets going up and down, so they just want to be in and out quickly. So I'd say that depends on the individual. Kutela
I'm
says,
asking because
yeah,
I was on I'm on H4, ne? And it's I never change it, but every time every time I do it on H4. I don't know whether I'm supposed to change it to a day or what. I think that's where my confusion is. I don't know exactly
yeah,
when like today I did it on H4,
yeah,
ne? But I'm not sure if that has any bearing on what you're trading on in terms of what you're gaining
yeah.
versus if I was on 1 day. I don't know.
Okay. I would say that's a great question. By the way, I would say first figure out what kind of a trader are you, or how long are you willing to hold trades. Um, I'm just gonna make this example. Let me say M30. That'll work. Yeah. So you can use this. Right. Give every time frame a purpose, so to speak. If you can say your daily time frame, high time frame narrative is always important. You're going, that's where you look at the direction and then you're gonna go scale down to 4 hour to find the structure or the level to buy or sell. And then you can refine your entries on a 30 minutes time frame. You do not need to look at all the time frames. I'd say for everyone, decide on 3 time frames. Which one you're gonna use for direction, which one you're gonna use for structure, and which one you're gonna use for entries. Now, part of the reasons I go through the monthly, weekly, daily is because I'm a long-term trader. Reason number two is um for you guys, for the benefit of you guys, I have to be thorough in my direction, finding my direction, so that everyone who's in this session can find where they fit in. Okay. If you're a day trader, I think the example is very good for you. First, understand where the day is going. Go to 4 hour time frames to find the structure of the market or the levels. And then 30 minutes, that's where you can refine your entry. Why 30 minutes? Because 30 minutes, that's where you're going to get those low risk and high reward setups. Um, this answer might sound vague to some people, but I'm trying understand that I'm trying to give you an idea so that you find what works for you. I'm giving you an idea so that you can find what works for you, and just to make sure that I accommodate everyone. Okay. There was a question from Kutala says, Max, why are you staying away from USD press? There's so much happening on an economic and political landscape. So the markets are not really going to move based on the natural supply and demand phenomenon. They are going to move because of other influences. Trump is saying this, Kamala Harris is saying this. Currently, the U.S. State Secretary is in Egypt to discuss a ceasefire between Iran, Israel, and Palestine. There's just so much happening. BRICS companies are already de-dollarizing, leaving the dollar, because what happened is when Russia was sanctioned, everyone in the world was like, oh, so they're using the dollar to control us. You know what? Let us find something that they can manipulate. Hence, the rise of gold. BRICS countries, the BRICS currency is going to be backed by gold. Hence, Russia is partnering so much with Africa. Hence, China is partnering so much with Africa, because where is gold really found in the world? Africa. So there's just so much happening. You cannot come up with a conclusion from a natural markets phenomenon. So it is for that reason I stay away from the dollar. However, it influences most markets. I'm happy that you understand that. So let's look at the dollar against the South African rand, as asked by Uncle Chris. So there we go. As always, welcome Sinovuyo. Um, Dollar and the South African rand. It's been bearish for a very long time, actually since March this year. This would mean the South African rand is strengthening, but I think the main influence here is the dollar weakening to the downside. So we're bearish on a monthly. Weekly, we're looking bullish. On a daily, we're looking bullish as well. So I would go with the main time frame direction, which is monthly. Look for selling opportunities here. Also because the dollar continues to weaken. I would say the next target on the dollar against the South African rand is somewhere around 17. That's where we're really going. So stepping down to a lower time frame to find where